Hello, and welcome back to the Fourth Revolution Quarantine Edition. Today, I'm going to be talking about the possibly over-optimistic market and some of the levels I'm looking to sell at and some of the levels I'm looking to buy at, as well as a couple stocks that are well-positioned for this post-pandemic investing world. So after the massive breakdown and market crash that we saw from the end of February to the end of March, we had an incredible recovery in the S&P 500, rallying over 30%. And we are coming up on this 3,000 level, which is the 200-day moving average, which could represent a resistance level. And I honestly think that this market has been over-optimistic considering the gravity of the situation that we're in. But this optimism is coming from a big push with fiscal stimulus in the CARES Act, from PPP, the Paycheck Protection Program, as well as the unprecedented level of QE, and the Federal Reserve is calling it unlimited QE for buying mortgage-backed securities, U.S. Treasuries, as well as grade A corporate bonds. And this has been propping up the asset market, and I think propping it up to a level that's unsustainable. So, I mean, we've had 26 million unemployment claims in the last 5 weeks, and we're expected to surpass 30 million when the claims are reported tomorrow. And this is crazy. People are completely discounting this. This is going to bring unemployment levels up to 20%, some are saying, for April. And we could surpass 25% coming into the summer, which would be the levels that we saw at the peak of the Great Depression in '33. And it's going to be years before full employment fully comes back. And I don't think that investors and institutions are really pricing this in. I mean, without full employment, demand just isn't going to be there. We're not going to be able to hit the same GDP levels that we saw last year for another 2 to 3 years, I think. So right now, we just reported a 4.8% decline in GDP for Q1, and this pandemic didn't even hit Q1 until the last month. So Q2 is expected to be exceptionally worse. A lot of analysts are saying it could be north of 30% decline in GDP, and some are saying even worse. So the markets have effectively discounted 2020's financials. We're looking further ahead now to 2021 and 2022. But a lot of analysts are saying that we're not going to hit the 2019 EPS levels until 2022, which is 2 years out. And like I said, employment is going to take even longer than that to fully recover. So what are the sectors that are really driving the market right now? And it's not surprising that tech is one of the biggest ones. You know, obviously with everybody staying at home, everybody's relying on tech more than ever, with whether it's their laptop, cloud computing, and you know, a number of other technological advances that have allowed us to work from home effectively. So healthcare is also a big driver right now, followed by consumer staples and utilities to a lesser extent. So some of the stocks that I'm looking to buy in a pullback, which I think is coming on the horizon after this earnings, if not during this earnings season. Obviously, timing is difficult. If we could figure out timing, we'd all be millionaires. But some of the stocks I'm looking to buy include Microsoft. Microsoft is obviously a huge blue chip name. They've driven innovation for decades on decades, and they continue to drive the cloud computing market. Right now, Microsoft is up for the year. I'm looking to buy it as it drops below 160. Obviously, I'm not going to be chasing this rally right now. I think we're overvalued. I'm looking to buy after it drops below this 50-day moving average, and in between that and the 200-day moving average would be a solid buy level for Microsoft. Another stock I'm looking at is SE. This company is dominating the digital market for Southeast Asia, which is a digital market that's expanding exponentially. And as you can see, it hasn't really been hit too hard by this global pandemic. It's stayed pretty buoyant, and we're actually seeing all-time highs right now with the stock trading at over $55 per share. And I don't think this stock is going to pull back dramatically from where we're at, considering the amount of growth this company's seen over the past few years. But I'm looking to buy on a marginal pullback, hopefully below $50. I would love to see it hit this 46 level, which is its 50-day moving average, but that may not be possible. So any price below $50, I'm going to start buying these shares at and continue to average down if it falls further. So another stock is Baba. Baba is my pick for the post-pandemic world. Baba controls the e-commerce and cloud space for the most populous country in the world and soon to be largest economy in the world, China. So they are right now the third largest cloud computing company in the world and the second largest e-commerce company. And they have been relatively buoyant throughout this pandemic. I'm looking to buy this stock at any price below 200. A lot of analysts are saying they're having a price target of 250. I'm pushing my price target up to 300, and some analysts are agreeing with that. I think they could even go beyond that in the long term. So any price below 200, I'm a buyer. I'm even a buyer now, but I think there's going to be a pullback, like I said. So I'm going to wait for it to drop below 200. So thank you guys for watching the Fourth Revolution Quarantine Edition, and I look forward to speaking to you guys next time.